All right, technical difficulties. I don't know what happened with that right there. My camera just, my little thing just started tripping and the phone just tripped out. But yeah, back into the video. I'm at 4 minutes in, 4 minutes 9 seconds in. So we take out these highs, these internal highs, and that right there, that makes me want to, really right here, I'm being pretty greedy. I can't lie. But, you know, it's okay if to be greedy as long as you're protecting yourself to the downside. So we really swept internal highs, and there's some nice relative equal lows at the bottom on the sell side liquidity. So I'm actually I really shouldn't be adding here looking back at it, but I did. So because I did, I'm gonna watch how I manage the position. So I'm marking out, I'm acknowledging that this is a bearish fair value gap, and I want to see how price starts to react. So these are my different time frames and my different charts. I have ES, NQ, and QQQ, and I'm watching all. Bro, what is going on with this? All right, so I'm about to break down my trades on July 15th, Tuesday. So what you'll see is basically how this is pretty much how I journal my trades, and I'm gonna be talking about how my whole thought process during my actual trading. So I'm gonna get right into it and see exactly my thought processes, because it's always easy to see 2020, you know, after the stuff already happened. But in the mix, while your money is fluctuating by the hundreds, you know, in seconds, you know, you could get a little bit emotional. And the less emotional you could be while you're making decisions, the better trader you'll be. So I didn't start recording this until later, but you see I'm getting right into a trade right now. And I'm going in with 3 cons. Looks like I have some sort of, on a higher time frame, I have a negative order block, well, a 15-minute bearish order block, but it didn't confirm yet. So that means technically price is still bullish. We just swept London liquidity. That's the yellow line, and I'm targeting the session highs. So after that, I would look for shorts taking out session lows, going into London lows, most likely. Don't remember exactly what happened, but it's a good way to journal. This is how I journal, because overall, you know, I want to forget what happened so I could go back and analyze exactly my thought process to see if I was tripping or if my thought process was aligned with what I know how to do. So I get a nice feel on that bullish fair value gap. There's relative equal highs right there in by that orange box, and that could also be a bearish entry sign technically. I think it wound up being one, but you want to, I'm putting it in 1.5 speed so you could kind of still see the price developing, but we're not here all day. And I'm looking at, you know, this is my entry on here on Top Step. So I have about what is that? About a 20-point stop loss. That's about the size of that fair value gap right there. And because price, you know, once price takes out that buy side, that internal buy side liquidity right there around 23,182, that is when I'm gonna most likely move my stop loss to break even, because we can reverse aggressively, because we're tapping into another higher time frame fair value gap, which is technically a bearish entry. So while you're bullish, if you start seeing bearish price action, it's okay to take profits or totally get out and either take a trade going the opposite way, or just be done for the day. So right here I'm up about $170, and as we start to create more fair value gaps on the way up, which are just impulsive candles, I'm looking to add on to the position because I'm pretty confident we're going to go touch those all-time highs right there. So that is my thought process. So as we tap into this order block, this fair value gap, we also swept those highs right there on the left, and we're tapping into, I think that's a 5-minute fair value gap. Yeah, that's a 5-minute fair value gap. So right here, I could be positioning myself. I could be taking profits and positioning myself to go short. But I want to see how these candlesticks start to react in this zone. I don't want to just blindly do that. But after that internal... Alright, so I had a little bit of technical difficulties. It's all good. So I'm looking at this 5-minute FVG or SIBI, and we have that consequent encroachment. So really here, I'm being a little bit greedy, can't lie. But I'm at least protecting my downside. It's not outrageous for me to want to add there, but it's not the smartest move either. So I see some good and I see some bad. They're in the middle, so really I should be chilling out. Then again, hindsight is always 20/20. So I'm not gonna be too harsh on that. Again, cycling through my time frames on NQ, ES, and QQQ. Just got filled on my order where I wanted to add to my position. So because I got filled, I want to definitely manage my stop to where there's no way I could lose. I have break even at best, well at worst. So the idea is to target the all-time high. And just created a SIBI, so I want that to fail and turn into an inverse fair value gap. That's what I want to see, but on a higher time frame, we're really respecting that 5-minute. So we actually just formed a 1-minute bearish order block. So really right about, I'm really coming to the point where I should be scaling out or taking profit and looking to short, because this does not look the most bearish on a smaller time frame. Cycle to the 5-minute, 15-minute. Yeah, really, we got that close below, so yeah, that's just straight greed. I was being greedy right there. Can't lie. But this is the whole point of going over your trades, to see how emotional you were being versus technical. Yeah, boom, right there. Should have got out right there. Yeah, at least taking one off the table. But I was just like, yeah, let me see how far I could go. Let's see if I'll be wrong. Boom, getting respected. And really, this is where I would get in if I was going short. So I should have gotten out since I was long. But tables turn, bridges burn, we live and learn. What Drake said? Yeah, so took out some internal liquidity, sell side, going back up. Really giving me another chance to get out right here. So I should have got out on the first one, coming back up. Could have got back in right there, because that's a confluence. That's a 5-minute fair value gap, a 5-minute SIBI, and a 1-minute bearish order block. And targeting those lows, that'll be a nice trade. Going for a nice short, that'll be, the market sitting here telling me what it's wanting to do, and I'm just not listening. But That's the bad. The good is I'm managing my stops to where I'm in profit, no matter what happens. I want to take profit here, but I'm not for whatever reason. Well, I know the reason. Being greedy. See, it's easy to be the best trader after the fact, or when you don't have any money on the line. But when you have money on the line, you fluctuate in the hundreds of dollars a second, you could start tripping out a little bit. But that's where the market experience comes in. Over time, you start to get better at it, handling your emotions, looking at the market's fake outs and everything. And you know, with experience, you learn how to deal with those emotions. You learn your strengths and weaknesses, and you build off of that. But yeah, the market is telling me right here, like it's tapping that consequent encroachment and just going down, getting 0 closed candles above that halfway point. So this is my last ditch effort to see if we're about to reverse right here. So I want to measure that discount wick, which is what I pulled out, and I'm gonna see if we get a close below there. I'm gonna close my trade. If we start getting, if we tap it but then go up, you know, I'm gonna stay in. But if we tap back in that 5-minute fair value gap, I should definitely take profit, or at least something off the table. Let's see what we do here. And this is good. I'm glad I forgot exactly what happened, because I could really judge myself and grade myself without having fresh So yeah, I got my second and really third opportunity right here to get in. So boom, got in. Professional stop loss. It's nice and conservative. I'm already up. Even if I'm wrong, I will be wrong $50. So I'm in half my position size as the first trade. A little bit Got the change in the state on the 15. Changing the state on the, not yet, on the 5. And we got the 1 minute inversion. 1 minute bearish order block. 1 minute SIBI. Looking like this 5 minutes gonna invert. Or I want the 5 minute to invert from this trade. And for this trade. And you know, I'm also gonna show my mistakes. So on this one, I remember I actually moved my stop too tight because I was trying to hold on to my wins. I didn't want to have a nice green day, solid green day turn into a small green day or even small red. And really, that's just emotional. That's not a good trading mindset to have. So it's interacting with that 5 minute SIBI or BISI right here, and as we start to move down, move my stop tight. I'm looking at that 1 minute bearish order block right there. Made another one. Wow. And really and truly, I can add to that. Like once I see that I have bearish price action on the higher time frame, we got an impulsive move from the higher time frame. If we go back and touch that 1 minute bearish order block, that's actually, I could add something right there. Right. Wow. Could add that. And right here, we didn't even touch. I moved my stuff pretty much to break even. And we didn't even touch it. And I took myself out the trade. So not only I moved my stop loss, my first stop loss didn't even get touched. Second stop loss was aggressive. I moved it to the previous high. And then I moved it to break even. And its price still didn't touch that. And I stopped myself out of the trade. So price eventually went beyond where I even had it targeted to go. And overall, that's my fault. But I'm showing my mistakes, showing everything. That's all part of it. You're gonna make mistakes. Not everything's gonna be an A+ trade. You can have a perfect analysis, but you mess up on execution. You can have an A+ setup, and the A+ setup just doesn't work out. That's all part of it, and that's gonna mess with your head mentally. But you have to push through that. And there's gonna be days where you really take an irresponsible trade and it works out perfectly. But you still have to be honest with yourself with your journaling and really note, like, look, it worked out for me, but I don't need to do that. That's a bad habit because that could blow my account if I do that too many times in a row. But that's my trade for, well, my 2 trades I took on Tuesday. I don't take more than 2 trades, more than 2 losing trades. But I try to keep it around 2 trades, maybe 3 a day, in and out, done before 11 a.m. And hope that helps. As you see, I'm gonna be dropping more of these videos. This is how you're gonna learn, getting that market experience. One way to learn is by watching me do it. Another way is doing it yourself and then finding your strategy and building on that. But one thing, whether you trade like me or totally different concepts, one thing you should learn is risk management, psychology, and developing the good habits that you see. And you can also learn from the bad habits I have, and I'll point them out. Wow, this is a bad one. Do not do this. And I'm trying to correct the bad habits I have right now too, to become better and better. So that's it, and I'll see you in the next video.